We've got Steve Sosnick, who is the Interactive Brokers Chief Market Strategist, here with us. Steve, thanks so much for kicking off the week with us. I mean, I thought that we'd be talking about this massive week, the deluge of data that we're going to get on the jobs front, but no, we're focusing in on what's taking place with a potentially revived meme trade here. Wonder what you make of it.
Morning, Brad. Well, we're talking about the really important stuff, right? Sarcasm intended. We've got a very consequential week, as you and Shauna laid out at the open, but here we are talking about meme stocks once again. My basic premise here is meme stocks are just, they're a sign of the froth that's going on in the market. There's activity in penny stocks, there's activity in meme stocks. And, Josh just raised a very interesting point. Do we even know that at this point that Roaring Kitty's account is actually controlled by Keith Gill, or can we verify those positions that were placed there? But obviously it doesn't take much to get the faithful excited in this stock, and they are excited once again.
Steve, does this just reaffirm what we have been talking about time and time again, that this story is here to stay? And when we talk about the retail trader and some of the excitement that we've seen and clearly playing out through some of these meme trades, it doesn't seem to be going away anytime soon.
No, it does not, Shauna. It's going to be here as long as we have a market that is exuberant enough, happy enough, whatever the right adjective is, to sustain this. And as of now, we can. Think about it. The meme stock phenomenon sort of died out in most of 2022 and a good portion of 2023 because we didn't have the euphoria across the board that we have now. Individual investors are back. In general, that's a very good thing. Although I'd rather they focused on more, shall we say, value-oriented types of names rather than just pure speculation, as it is in this case.
Yeah, Steve, talk to me a little bit more about that. And when you take a look at the names that we even have up on the screen right now, clearly we're all seeing this move higher. How does that then, or does it then, get mirrored into some of that broader market action?
I think they're related. I think that the meme stocks are sort of the tail, the flea on the tail of the dog, although they're a very interesting one. But it's not really what's driving the market. What's driving the market is you have, individual investors who, in terms of investing in good stocks, have made lots of money in things like Nvidia and AMD and stuff that you talked about at the top of the show. Those names are continuing to work for them. So at some level, they're playing with house money, and it does embolden people. Again, I'm not upset if people are making money in stocks that are making money. This is a bit speculative, and in this case here, a bit. I'm trying to think of the right word. Manipulative is the wrong word, but at some point. Is whoever's controlling this account doing this in your best interests or in their best interests? And really, you should think that one through, because to me, it's pretty obvious whose interest it's in.
I mean, yeah, and a position of this size, especially, Steve, considering in the past what the actual thesis or the setup was going into it. You had a stock in GameStop and then AMC as well that were shorted and more than 100% shorted, essentially. So it was a squeeze of epic proportions that they were really trying to, and successfully enacted. What's the thesis this time around, to whatever extent we can gather?
Honestly, I think it's, try to suck in the people who are following here in this case. Now, if indeed he owns 120,000 of those June 21st 20 strike call options, it's possible, but that's out of an open interest of 145,000. So that's a huge percentage of that open interest. So you need a rally like this to be able to sell those out, or perhaps exercise them. It depends. I'm sure it's hard to say which he'll choose at this point. But there's an old saying in poker: if you don't know who the sucker is at the table, it's probably you. And you're not in on the inside of this. If you're chasing this stock up here, you're more likely than not the source of liquidity for whoever's controlling this account to sell into your enthusiasm. They're stoking the enthusiasm to get ordinary people to buy, and then they can sell into it. I can't imagine, if you looked at this account, if they would even show it tomorrow or Wednesday, that it would have anything close to the long positions it would have today, because they would be nuts not to take profits into a rally of this magnitude.
Steve, I guess my question to you is more of a regulatory question, and I not necessarily weighing in on what should be done, what shouldn't be done, but this does draw some attention to regulations or lack thereof surrounding social media, and of course when you compare it maybe to analyst notes that are out on the short and long side as well, you can make the case that it's not too different. But do you think, or will we likely see maybe more scrutiny when it comes to social media posts, especially market moving ones?
I'm neither a legislator or a lawyer, so I'm going to have to say I don't know. I doubt it because there's other. It's hard enough to get lawmakers to agree on pretty much anything. In terms of should they? Yeah, probably. As someone who works for a registered firm, I have very strict rules and regulations about what I can say and what's perceived as manipulative, that sort of thing. In terms of social media, it's not. Now, I will say here, whoever's doing this is actually very clever because they really haven't been, overtly touting the stock. I mean, the original meme was, a guy leaning forward in a chair. This is just posting a position and showing an Uno card. Obviously, this one's a bit more obvious because the Uno card's a reversal, but none of it is specifically, touting the stock. So from a regulatory point of view, it's murky. But I do think that it's not a level playing field because on social media, if you get enough of a following and are not actually registered with all the various multi-letter authorities, you're much less fettered to say things than you are if you're in a position where you're subject to having FINRA or the NASD come in and audit you.
Steve, I think you mentioned something very key as well, and it's a decision that a lot of traders or investors are really weighing to begin this week's trading session. Do I chase GME just because Roaring Kitty posted something, or do I chase NVIDIA or some of the chip names out of Computex, and NVIDIA specifically ahead of a 10-for-1 stock split that happens next Monday?
Well, Brian, chase is always not necessarily the best word for me.
Sure.
In the case of NVIDIA, you are buying into a certain amount of froth here, especially revolving around the 10-for-1 split. And I do get a bit nervous that may be a buy the rumor, sell the news type of event. But ultimately, the thesis is there. So, you could treat that as, at least you can analyze this as a normal situation and say, OK, it may be getting a little extended, but there's, the earnings are this, the expectations are that. GameStop has none of that. It's not. It was overvalued at 20 on Friday, and it's overvalued at 40. It's double as overvalued at 40 today. So I think in general, chasing is a terrible strategy, because you're not in control of the situation. You are just, it's where momentum trading sort of morphs into the greater fool theory. And I think we have to be very careful of that. I actually wrote a piece more or less entitled with that title last week. And I do wonder that, if you're the one buying GameStop simply because you saw something on Reddit, that's one of those where I think you are engaging in a fairly dangerous chase. Mm-hmm. If you're trying to do some analysis on a stock, it may be extended, et cetera, but at least there's something there. And but even there, I don't want to see people caught up in enthusiasm. I tend to be more of a buy the dip person than a chase the rally type of person.
Makes a lot of sense. Heck of a lot of sense when you got the stock up just around 70% right now ahead of the open. Steve Sosnick, always great to get your insight. Thanks so much for talking to us here this morning.
Thank you, Shauna. Take care.